Today is Wednesday, November the 20th. Advancers trailed decliners by about 2 to 1. It was the news that there may not be a China Phase 1 trade deal signed this year. Like, who is surprised about that? Apparently, there are still people who are surprised at this. But it caused the market to drop and then to come back because, of course, they realized that they've known for a long time that there wasn't going to be a China Phase 1 deal signed this year because they've only had one person's word to take for it, and I don't think he has any credibility anymore. This is going to take this is official now for the 20th, the market breadth indicator down to its previous low, meaning that the neutral line was resistance, and now there's money drying up, moving into the market. Now, before I move on to the stocks and the charts, and there's some really interesting things to see, and our Fibonacci's and our clouds are really, really working for us. And I made a couple of trades I'll tell you about. You already know them if you followed me on Twitter. This is a very good article to read, the EMA or the SMA, which is better. Bottom line is that you need to follow both of them. Some people prefer the EMA, as does McClellan. Some people obviously follow the SMA. But what's more important is that the Chiku span in the Ichimoku reacts to both of them. And I'm going to show you some examples. So now let's go to the S&P, which had this long tail down and bounced up. But, you know, it looks like we're in for a tough time, and we're going to see more lows before we see another high, in my opinion. Apple was down $2.29 today, and I got out of Apple completely. I scraped about $200 in profit on my puts and decided that I would get out and wait for another opportunity, because we pointed out yesterday that this 138.2% Fibonacci was hit, and that was going to be resistance yesterday, and it proved to be resistance today, and we finished just below the 8 EMA. That Fibonacci, in case you didn't see it yesterday, is an extension from 2000 to the high recorded last year in October 2018. Then we came back down and we tested the 61.8%, got support there, came up to 138.2%, and that's completion of wave 3 of the Elliott wave, and that's enough to spook technical traders, and they've gotten out. Now, what is wave 4 going to look like? I'll talk a bit more about that tomorrow. Caterpillar continues to drop, and this time on very little volume. So there was a lot of volume in the S&P, not so much in the Dow. Caterpillar is both in the S&P 500 and the Dow. But we are definitely, Caterpillar is definitely moving down into lower territory, and it wouldn't surprise me now if it comes down to test the 50. Now let's take a look at the weekly, because I tweeted that the Chiku span at one point in the day, sorry, that's not, it wasn't cat, but we've lost the, Chiku span has lost the support of the cloud, which means that price is coming down to the 8 EMA and quite possibly down to test the cloud here. Let's go back to Apple, and we look at Apple. No, it's not that one. Let me move on. AT&T. AT&T yesterday came down to test the cloud, got some support, but that wasn't good enough today, and it was a second analyst who came out, and I think this one may have a little bit more credibility, saying that AT&T is going to suffer some subscriber numbers. on the TV side, so that was enough to spook the market. And we had this doji day on fairly high volume, so that is both good and bad. Where did it get its support? Well, where it got its support is right here in the middle of the cloud. That's nothing. Where is it? It's exactly where the Chiku span today came down and touched this 50 EMA and SMA. They're so close together that they coincided. And if we go back and we look at the 15-minute, we can't see the daily Chiku span there, but we know that the Chiku span came down to this value at some point during the day, and that would have been where it caught support on those 50s. And that's important. So we look at that tomorrow, and we should expect a bounce. Let's see how we finished off the day. Let's just go to the 5-minute, and sure enough, look at that. As soon as we hit the Chiku span, hit that low and hit the 50, up it went through an awful lot of resistance, and the Chiku span on the 5-minute broke into the cloud. So I would say that T is going back up tomorrow, and that is all good stuff. I rolled my 38 weekly calls into December 20th weekly calls. So my position now with T is that I've got 1,500 shares, which is a little bit more than I've ever held for AT&T. I think 1,100 was probably the highest, but they should be declaring a 51% dividend just around Christmas time. And between now and then, I am going to try to get half of the dividend out in short calls. So this was 38 cents that I was able to make this week on the short calls. So that's almost the same as the dividend. It's 51 cents for 3 months. So this week I made 38 cents, and I rolled for another 35 cents out to December 20th. So I'll be bringing in 60% of a dividend through short calls and holding on until the dividend in late December. WDC, a little bit of a bounce there. Whirlpool, also a little bit of a bounce off the 68.1%. Amazon continuing to suffer. And look at the Chiku span now. The Chiku span now is in this cloud. And when it comes out tomorrow, it's going to be under this candle, which is going to be more resistant for Amazon. So not a good stock to be holding on to right now. That's about it. So where are we going tomorrow? I think that the market is going to experience a little bit more downside. So more lows before we see new highs.